evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Wednesday, the 4th of October, 2023. All right. Energy prices got smashed today, 5% decline in crude. You know, one of the things that people are discussing is the reduction in gasoline demand. A year ago at this time, we were using 9.3 million barrels a day of gasoline. Now we're using 8.3. I think it was 933 versus 8.33. What is that? Well, it's not lack of demand completely. It's a combination of things. Number one, in 4 years, we've gotten rid of a lot of cars on the road that were gas guzzlers, replaced them to a degree with cars that aren't as much a gas guzzler, getting way better area. You got hybrids, you got regular ICE engines, and what about electric cars? You have that as well. Are people driving less? To a degree, they are. You know, as gasoline in the West Coast is over, what, $6.50 a barrel, believe it or not. You come back here and it's still that money. When you look at this month, I don't think people drive as much at the end of September, beginning of October, or the beginning of September as they do maybe in June. I mean, there's different times you have to look at all this, but there is a reduction in it. But I think part of it's EVs, hybrids, better engines to a big degree. And then that other degree in there, and it's a wild card. People saying, I don't want to drive as much, it's costing too much, I'm going to cut back. Okay. We saw today something else. Was this the unwinding, and it's possible, of being long crude, short bonds? There's talk that could have been. That would be the case, which means people think maybe interest rates have gone far enough and energy prices on the upside went far enough. I don't know. These are the things you'll be hearing about over the next 24 hours, probably on TV and things of that nature. Where's America today? No different than yesterday. We don't have a Speaker of the House. The two gentlemen that are throwing their hats in the ring, I don't know if either of them can get anything done or not done. I'm not for or against them. I just question whoever is going to run, what do they have to give up? In order to get these votes, do we have to go through what McCarthy did again? Only a fool would do that. So I don't think that's going to be the case. Are we going to get a hardline person? Are we going to get somebody that's more soft line? How do you appease the 8 Republicans that succeeded in getting McCarthy going? But that was McCarthy's own doing to a large degree. He so badly wanted the speakership that he took it knowing that at some point down the road, this could happen. How could he not? It took but one congressman to call for the vote. If he got other people to join in and couldn't get Democrats, his speakership was gone. If you analyze it, it was just when the event would happen, not if you got hardliners that were against everything he's been doing. That's what happened. Can the next person do that? I don't know. I don't know what they'll do. So we have to be very careful. We have to address the budget. We have to address the border. I cracked up in Chicago politics today is finally this sanctuary city has come to its knees. They can't handle the migrants. They don't know where to put them. There's no money to do it. Shelters that they put up are so filthy, so disgusting, that they're closing them for sanitary reasons and they're throwing the people out of them. Now, our mayor wants to go down, mayor of Chicago, and take a look at the border. For what? What are you going to see with those eyes of yours? Tell me what you're going to see that you don't see at the bus stop. 20 buses, 15, 30 buses a day coming in, full to the brim of new migrants. What are you going to see there? How they load them? The president doesn't listen to you. He doesn't listen to Pritzker. He's deaf. He's deaf to the issue. Otherwise, he'd address it. It's really that simple. All right, let's get on with the market because I enjoy doing that, by the way. I do enjoy it. All right, WBA. So we've had a bounce in Walgreens. Does it mean anything? That's the question. The market came off the lows, broke the downtrend, not able to get an uptrend going. You have a higher high and instantly a lower low pattern, but you are over and you have managed to flip to the other side of the 18-day average of closes. I give this to hope that the new CEO that is taking over can get something positive done, and he visits the stores and he sees how poorly managed they are. If you have visited a Walgreens, they have staff there. They should have a line for testing, for the COVID shots and the flu shots, separate from where you pick up your pills, you drop off your prescriptions. Save people the time, the effort, instead of standing in long lines. I've given you a very simple thing to earn back people caring. Sort of like the movie theaters when I had one. I don't know why they don't take a 2-hour movie and give you a 15-minute break in it. They'll buy candy, they'll go to the bathroom, everybody's gonna smile, nobody's gonna care. The theater would make more money. I don't get. Sometimes the most basic things are in front of people and they don't get it. Okay. When we take a look now at where the Bollinger Band is, you didn't quite get up there at 2288, but that's where I think resistance is, and the market instantly got overbought. So what happened is you had a bearish market used up its energy, ran out of the energy, you crisscrossed out of the reading, you made a run, didn't quite hit the 18-day average, and now you're, the upper Bollinger Band, and now you're sort of waffling right here. That's my analysis of that. In Rivian, we're playing at the 18-day average of closes. I read an article today that I didn't like on Tesla and Rivian. The way they build these cars, I didn't realize this. You get into a car accident. I didn't say a wreck, a car accident. Back end gets to the point where it needs to be replaced. You can't do it. The car's a form of, I think they call it a unibody or whatever that might mean. It's the way they stamp them out to save money. There's fewer welds, a bigger piece. You got to pop out to take out some of these parts. The rear window, the front window, all the doors, got to cut the parts out, got to weld things back in. I read an article today, I think it was in Market, no, I'm trying to think of, I think it was my news app. And one of my news apps said it was a $40,000 repair job. I mean, I can see $3,000, $4,000 to do a paint and all that. These are for jobs because of how these cars are built. I don't want one. Did you hear what I just said? Unless my insurance is going to cover that, I don't want that car. Oh my God. Nobody talks about these things. In UGA, you're still falling, and that's your gasoline fund. We know it's been wiped out. Look at that. And again, is it because of better mileage cars, mixture of EV, people not driving as much? Those are the questions I don't know. When we look at XLF, the financial services, as long as you have an embedded reading until the red line closes over 21 on rallies, I expect the pros are selling short, and there's something happening even more bearish that's bothering me. Notice how the 18-day average is now getting ready to cross underneath the 100. When that occurs, you have a classic bearish setup. You then have the shortest term average in red underneath the green, which is the medium, that's the 100-day, and then you have the 200. So this is a real important area for me, at least, as a chartist. In XLI, the industrial sector, okay, so what are we doing here? We have seen some reports where industry is picking up in some of the cities. I applaud that. You're not seeing it in the chart action. You're embedded. So until this market loses that, I'm bearish, and there's about to be another crossover. The 18-day average is getting ready to cross under what? The 200. That's a one-year average for all purposes. If you think 200 business days is just about a year. Whoa, that's really an important number. Another bearish setup that's setting itself up. Now AI, that's the C3 AI INX. And as you know, this is one of the new stocks that's all the favorite because of AI. Well, let me tell you what happened. In May, this chart was at 15 and it soared to roughly 50. And it's now going from 50 back down to 23.37. So reality hits all these things. What happens is you get in the video and people buy everything around it, and the market goes. Coming from a futures background, I watched people get into these plays. What would happen is the front month of a futures contract would, let's say on the upside, soar. So people would buy the back end of it saying, oh, that's going to go too. No, it isn't. To a degree for a little bit, maybe. There's a reason it was down to begin with. That means more supply or whatever coming on. Well, you don't have different contract months on the stock price itself. But the concept is there that, hey, what goes up, is it going to stay up from the front end, or do they have to come back to reality of what their business is? This appears to be the story in this particular stock. In RSP, so the consumer, we have seen them getting beat up. And folks, I am not friendly until, and by the way, I'm not friendly, period. But when the red line closes over 21 will be the time I say, nah, I don't want to be bearish anymore. Do you now believe that when you get these bearish crossovers, what happens? First one happened here, broke the market. Second one here, now a new low in the market. Does it always happen? Nothing but death and taxes seems to always happen. But are these high probabilities? Yes. It's that simple. Go back and study them yourself and you'll see what I'm saying. XHB, the home builders. As I said, I won't get beaten up. I don't want to beat this up too much. Home builders are a phenomenal lot. They figure out ways to survive markets. They're called a home builder. That doesn't mean they're a home developer. They're not going out buying tracts of land and putting up homes that they did in the, let's call it the 60s. People coming back and there's suddenly money, the Korean War ends and everybody's buying different things. You don't have that today. So the home builder is looking for you that's got money, you want to move, he'll find a way to work with you, different levels of home builders, obviously, to make your dream come true. That's why they're called a home builder. I'm not talking realtors. Are they down? Yes. With 8% mortgages, this game is much harder to do than it was at 6% mortgages. And you can see the impact that's hitting them. That's the way I think about it. It doesn't mean I'm right. In the energy sector, I don't think I want to be bearish beyond this. The combination of a 200-day, 100-day average, you own it under there. I don't want to. I think that is the spot that pros are going to cover shorts. In GLD, I still don't know why anybody wants to own gold. I have a hard time when I can get 5.5% on a 17-week bill that I should buy gold. Why should I own gold? All right, we're not at war in the United States. The dollar's super strong. We're fighting other economic battles, but we have a Fed that is determined to beat inflation, so inflation's out the door. The strong dollar, the high interest rate just isn't friendly gold. Will you get bounces? You can always get bounces. Markets get overdone to the up and the downside, but you've broken the back of the sideways action in this market. If you view this as all sideways action, it's broken out to the downside till it gets back over here, the 179.40 zone. I'm just giving you a number. That's my analysis of it. In SLV, oversold, but could embed, still headed lower, similar to the gold. Now you got to prove by getting back over this number, the most recent spike high up here, that you've got anything in the market. On the way up, the pro is probably looking to go short and test it. In the copper market, China, China, China. Just think China, China, China. Because they are 50% of the world consumption of copper. And if they ain't consuming, well, then copper ain't being consumed. If other countries slow down because of high interest rates, what do you do with this? It is adjusted. It's no longer sitting up here at 42. It is now down to 33. This is a big drop, almost a 25% drop in price. TLT, as long as nothing is done to curb our budget, we have a problem. And that problem keeps interest rates very tight. I don't know that the Fed will do anything, but I think after Friday we have to decide, are we bullish, bearish, or what? And I think that will be my final decision. Right now, I've had an ADP report that shows, half of what the market was expecting in the way of new jobs. That's what the Fed wants. But I had a JOLTS report yesterday that showed that we added for help signs, 500,000 or something? That isn't good. So which way? Let's see what the jobs report shows and see if that gives us a better idea. Right now, still in the bear camp. UUP, as long as interest rates stay strong, as long as we're the best game in town, yes, you could lose the embedded reading by closing under 79, and then I'd have to say time to step back. It hasn't done it. Until it does it, I contend the pros are buying the pullbacks, looking for the higher highs. In FXE, it's the flip-flop. Because the market's got its embedded reading back in play, the rallies are being sold. It's the flip-flop of the dollar. And when it gets back over 21, I think the pros will come out. So that's what I'm saying. But I have something really big for you. I've done a special report. And on this report, I only cover the seasonality of the Dow, the S&P, the Russell, and the NASDAQ. Not the normal bar charts, seasonal charts only. It's so important right now. I'm not doing the price counts. I want to tell you all the things you're not getting. You're not getting a monthly chart or a weekly chart or a daily chart. It's purely the seasonals. And what I do on the seasonals, and by the way, I do talk about world events in it. What I do with the seasonals, I show you the 30-year seasonal pattern, going back 30 years, the 15-year, going back, and the 5-year. Day by day, I'm not going back 30 years, from October 4th, today, right into year end. I think you want to see this report. It's fairly important. Because what I'm looking for is what I told you in my last report that, fingers crossed, I got very lucky. I thought September would be a down month, a strong down month. It was. And then I said, I think we're in a transition period in October, looking for a bounce into November. It's what I said. Doesn't mean I have to live with it, but I'm still there. So now, where does it fit in? That's what I've done here. So to get the report, move your cursor to the top. You'll see an icon. Give it a click. Go to iraepstein.com. Let me help you with the spelling. IRAEP as in Peter, STEIN.com. Under the word research, the report is there. It's up 3 business days, starting now. At the end of that, it's history. You don't see it again. And I had so many people on the last report. Would you send me that report? No. Go to the website to view it. Otherwise, don't see it. My game, that's my rule. You have yourself a great day. I'll see you first thing in the morning. Take care.